Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Coil Tension Breakout. This is a volatility compression strategy. It watches for the market to wind tighter and tighter, like a coil, and then it looks to join the move when that tension is released. Over the next several minutes, we'll explore how it defines a coil, how it filters trades with a trend gate, and how it manages risk. Let's get started. So what exactly is the Coil Tension Breakout Expert Advisor, and who might find it interesting from a learning perspective? At its core, this is a volatility compression breakout strategy. Rather than chasing every move, it waits patiently for the market to go quiet in a very specific way, and then it looks to participate when that quiet period resolves into a directional move. The distinctive object it hunts for is what we're calling a coil. Picture a short run of candles where each one's range is smaller than the last. The bars pinch tighter and tighter, packing into a narrow band. That converging shape is like a spring winding up. Volatility is being wrung out of the market bar by bar, and that compression often precedes a more energetic move as the balance resolves. The strategy runs on a single primary time frame and is designed to be time frame agnostic, though it's often discussed on the 15-minute up to the 4-hour charts. It's well suited to liquid instruments such as major foreign exchange pairs like Euro-US dollar or British pound-US dollar, or a broad index. 3 ingredients drive it. The average true range measures how tight the coil is and scales its stops and targets. A slow exponential moving average defines the trend regime and acts as a gate, so the strategy only takes breakouts in the direction the market is already leaning. And the geometry of the coil itself, its high and its low, defines the boundaries that price must break to signal a trade. In terms of trading style, this is a patient, selective, trend-following breakout approach. It won't be in the market often. It's designed to wait for a clean, well-formed setup. That makes it most interesting to traders who value defined risk and are studying how volatility compression and trend filters can be combined. As always, everything here is for educational purposes only, and trading always involves the risk of loss. Let's break down the mechanics step by step. Everything the strategy does keys off completed bars, so there's no repainting. It waits for a bar to fully close before making any decision. First, it measures the coil. It looks back over a set number of just-closed bars, 4 by default, and checks whether their individual ranges are contracting monotonically. In plain terms, each bar's high-to-low range must be at least a set fraction narrower than the bar before it. The default contraction factor is 0.9, so every bar has to be at least 10% tighter than its predecessor. If even one bar in the sequence is wider than allowed, the pattern is rejected. This is a deliberately strict test. It wants a smoothly winding coil, not random choppy bars. Second, it checks that the coil is genuinely tight. It measures the full span of the cluster, from the highest high to the lowest low, and requires that span to be no larger than a set multiple of the average true range, 1.5 times by default. A coil that's still wide enough to hide a large swing is thrown out. Third comes the trend gate. The strategy reads a slow exponential moving average, a 100-period average by default, and measures its slope over the last several bars. It will only take a long trade when that average is sloping up, and only take a short when it's sloping down. This is the filter that keeps it trading with the prevailing direction rather than fighting it. Then the release. The just closed bar is the release bar. For a long, its close must push above the top of the coil by a small margin measured in average true range, and it must be a bullish bar, closing above its open. For a short, the close must break below the bottom of the coil by that same margin, with a bearish body. Only when the coil, the tightness, the trend, and the decisive break all agree does the strategy signal an entry. Risk management is where this approach is most distinctive. The stop loss is structural. It's placed just past the opposite edge of the coil, plus a small buffer. Because the coil is tight by design, that stop sits close to the entry, keeping the risk on each trade small and well-defined. The take profit is set a fixed multiple of the average true range away, 3 times by default, giving a target that's several times the size of the risk. On top of that, there are 2 safety features. If a later bar closes back inside the coil, the breakout is treated as failed and the position is closed immediately. And once price runs one average true range in favor, the stop is pulled up to the entry price, so a trade that was working can't easily turn into a loss. Let's look at the actual MetaTrader 5 code that powers this. At the top are the input parameters you can adjust in the strategy tester. CoilBars sets how many successively narrowing bars form the coil for by default. ContractionFactor controls how much tighter each bar must be than the last, defaulting to 0.9. Coil ATR-max caps how wide the whole coil can be. TrendPeriod and SlopeLookback define the slow-moving average and how its slope is measured. BreakAtrMult is the decisive break margin. Stop buffer ATR sets the buffer beyond the coil for the stop. TpAtrMult is the take-profit distance, and break-even ATR controls when the stop is moved to entry. Now the signals. The long setup is a single combined condition. The slope must be up, the signal bar's close must be above the coil high plus the margin, and the close must be above the open, a bullish body. When that's true, the code reads the current ask price, places the stop just below the coil low, sets the take profit a multiple of average true range above entry, and calls trade.buy. The short setup is the mirror image. The slope must be down, the close must be below the coil low minus the margin, and the bar must close below its open. The code then reads the bid, places the stop just above the coil high, sets the take profit a multiple of average true range below entry, and calls trade.sell. Notice how both sides are perfectly symmetric, the same logic in the opposite direction, and how the structural stop is always anchored to the far edge of the coil. Let's bring the whole idea to life on a chart. Across the price you can see a blue line. That's the slow-moving average the strategy uses as its trend filter. Watch how it climbs steadily on the left side of the screen. On the first 3 candles, price is stepping higher. Each close above the last, and price sits comfortably above the rising average. That tells the strategy the prevailing trend is pointed upward, which is the only direction it will consider taking a long trade. Now watch the next 3 candles closely. This is the coil. Notice how each bar becomes noticeably smaller than the one before it. The first of these has a modest range, the second is tighter, and the third is tighter still. The highs and lows are pinching together into a narrow cluster that sits just under the recent peak. This is the winding motion the strategy is searching for, volatility being squeezed out bar by bar, with the whole group packed inside a tight band measured against the average range. It is not one quiet bar. It is a genuinely narrowing sequence, a miniature pennant. Then comes the release. The next candle opens inside the coil and closes decisively above the top edge of that cluster, clearing it by the small margin the strategy requires, and it closes as a strong bullish body. Because the trend filter is already sloping up, all of the conditions line up at once, and the buy entry marker appears. The strategy enters long right as the coil lets go. From here, follow the price higher. The 2 candles after the entry extend the move, printing higher highs and higher closes as the stored tension releases into a directional push. Price reaches the take profit marker, which is set a fixed multiple of the average range away from the entry. That's our measured target being met, and the long trade is booked. Now the character of the market changes. Price rolls over at the highs, and over the next couple of candles it begins stepping lower. The blue average flattens and then tips downward. That shift is important. The strategy will now only consider a short trade because the trend gate has turned down. Watch the next 3 candles form a second coil. Once again, the ranges contract, each bar tighter than the last, compressing into a tight cluster, this time sitting just above a fresh low beneath the falling average. The tension is building again, only now the bias is to the downside. The release follows. The next candle closes firmly below the bottom edge of the coil, clearing it by the required margin with a bearish body, while the average is sloping down. Every condition is satisfied, and the sell entry marker prints. The strategy enters short exactly as the lower boundary gives way. Price then drops into the final candle, reaching the take profit marker below, again a fixed multiple of the average range from entry. The measured downside target is met and the short is closed. A couple of details worth noting as you watch. By default, the strategy looks for 4 successively narrowing bars, though we're showing a simplified 3 here, so the shape is easy to see. The target on each trade is set at roughly 3 times the average range, while the stop sits just beyond the opposite coil edge, which is close by design. That's what gives the approach its asymmetric reward-to-risk profile. And if either breakout had failed, if a later candle had closed back inside the coil, the strategy would have exited immediately rather than waiting for the full stop, while a break-even feature pulls the stop up to entry once a trade has run one average range in its favor. Notice the symmetry. In both trades, the entry only happened when a tight, contracting coil released in the same direction the trend was already leaning. The stop sits just past the opposite edge of the coil, so the risk on each attempt stays small and clearly defined, while the target reaches for a reward several times that distance. That asymmetry, a small, defined risk against a larger measured target, is the heart of what this strategy is trying to express. That brings us to the end of our look at the Coil Tension Breakout Expert Advisor. We covered how it identifies a coil of successively narrowing bars, how it uses a slow-moving average as a trend gate, how it enters on a decisive release from that coil, and how it manages risk with a tight structural stop, a measured target, a failed breakout exit, and a break-even ratchet. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like me to explore next, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.